It's capital gains and it's SPACs here on Investors Hub Market Vision. Hi, I'm Andrew with Investors Hub, and today we're talking with Jea Yu. Now, he is a longtime stocks trader and market analyst, and we're going to be talking with him about how he thinks the market is going to react to the possible capital gains tax increase under the Biden administration. And in the back half of the video, we also talked to him about some of the strategies he's using to stay ahead of changing market dynamics, one of which is paying attention to what's going on in the SPAC world. So it's a longer interview, and it's a good interview, and I encourage you to watch the whole thing. But if you're finished with a topic, we have chapter points down in the description, and we're also going to have chapter points that are physical text that are on screen, so you can scroll through the video itself, just in case you don't have access to the actual chapter points in the description if you're watching this embedded somewhere. So watch or listen, relax, and let's hear from Jea Yu. So do you think that the capital gains tax will be changed under the Biden administration? And if so, how will the market react?
Okay, Andrew. So the immediate catalyst is going to be January 5th, 2021. That's when the Georgia Senate race, which is currently neck and neck, that's when the votes come in. If the Democrat runner wins, the Democrats take control of the Senate. And at that point, you can expect the markets to sell off just from the implications of corporate taxes going up, capital gains taxes going up. Joe Biden has said he's looking at raising cap gains taxes back up to 39.5%. If that happens, expect the markets to sell off. Now, right off the bat, the S&P 500 this year, 5 stocks accounted for 3/4 of the gains. All right, those are your FANG stocks. You can expect the FANG stocks to sell off immediately. And since they make up a good chunk of the indices, the S&P 500, the NASDAQ 100, and then stocks just below that, the markets move. The markets move in sectors and industries, but when you have the sector general sell off, everything else kind of sells off with it. All right, but the FANG stocks, they're the ones that are going to sell off first. As far as the money, where's the money going to go? There are companies that have actually turnaround companies. Companies are actually down for the year. For example, COTY, COTY. They've actually done a deal, and the stock was down, trading around $3. It's about $7 now. It's still negative 30% a year. The S&P 500 is up 16%. This is still down 35%. To make a long story short, and I wrote an article about them, they sold off, they actually sold a chunk of their hair care business to KKR. And when you look at the numbers, KKR has a conversion option at $6.28. JAB Holdings is the largest holder in COTY. They're in from $11.25. KKR basically provided $2.5 billion in cash. That goes towards debt. So COTY's debt gets cut from $7.9 billion down to $5 billion. They still own 40% of Wella, which drops their debt down to $4 billion. Now, all that extra, the debt financing, the interest charges, that goes straight to free cash flow. So that's the type of company that's kind of under the radar, that is still down 35% for the year, that would see money flow, because the fundamentals have changed during the pandemic, and it is once again still down 35%. Now there are other companies like Big Five, BGFV, Big Five Sports. This stock is up 300% for the year, trading around 9. All right, actually 200%. But it's got a 5 PE. These guys are making money hand over fist. I think they blew away the last earnings by over $1 a share. Okay, even though this stock is up so much for the year, when you look at Dick's and you look at Hibbett Sports, DKS, Dick's Sporting Goods, Hib, they're trading around 12 to 15 times 15 times earnings. So at 5 times earnings, this thing is trading at a third, right? So that's a company. There are small caps that are under the radar that are still bargains. Something like a BGFV, Big Five, well, you're looking at multiple expansion there. That's undervalued. Something like a COTY, COTY, you're looking at a company that's under the radar, completely improved its debt, brought on a new management team, and has 67% of the shares owned pretty much by the insiders, including KKR and Jab Holdings. All right. And like I said, Jab Holdings, 11.25 average price, stocks trading at 7. So there's going to be pressure to push that stock up. And when people look at the lows for a lot of these stocks this year, they get, they are like, oh, it's up 200% off the lows. But how much is it down for the year? All right. And that's the thing. You got to compare it to the S&P 500 as a benchmark. So companies like that, I think they're going to see money flow. I think there's going to be more breadth. Now, the irony here is that since the bigger stocks have a bigger impact on the S&P 500, you're going to see the S&P 500 sell off, but you're going to see this money flow flowing in to these smaller names, I think. All right. And ultimately, if the Democrats win, that's going to change the environment. If the Republicans win, do I think that cap gains taxes will go? Initially, they're going to block every attempt, right? But 4 years is a long time, and you never know with these politicians. So I think just having the Democrats in the House and in the White House, there's going to be enough fear in the markets that cap gains taxes, corporate taxes, at some point they will go back up. Yeah, absolutely. Absolutely. It's a gray area. They're always making deals, side deals and whatnot. So you never know what's going to be compromised to pass a bill or something like that.
So you mentioned a couple of companies that you think are going to have an inflow of investors. Do you have any companies in mind that you think are going to experience an outflow of investors if capital gains goes up?
Oh yeah, definitely. Well, like I said, Apple, Facebook, Netflix, Google. Basically, you're talking about the FANGs, the stocks that have actually outperformed ridiculously in the past year. Past couple of years. I mean, the Nasdaq's up, I believe, what is it, 44% for the year. S&P's up 16%. I mean, the S&P is still trying to catch up with the Nasdaq. You kind of used to be the other way around. I mean, the Nasdaq's always been a little stronger, and the pandemic has basically magnified the fact that the pandemic winners were the tech companies, right? E-commerce has accelerated. I mean, some people have estimated the migration to digital has literally accelerated a decade within 6 months' time, because of the pandemic. If you don't use the mobile apps, if you don't use the internet, now you're forced to, especially with the lockdowns. People were forced to adapt to digital and e-commerce, and it's sticky. Not everyone's going to stick with it, but it has provided an opportunity for companies that can take advantage of frictionless, contactless, integration. So the old school stuff that got washed out. So, and most of those companies are on the Nasdaq, the tech companies.
So what strategies are you employing to stay ahead of this potential change?
Well, we're always looking for bargains. Like I said, just like COTY, just like Big Five, a lot of these smaller cap companies. We don't like chasing Apple and Tesla. Now you can always find subsets based on the themes. Tesla, electronic vehicles, EV. So in the last few weeks, I mean, the momentum has been ridiculous for EV companies, electronic vehicle companies, cars, Chinese EVs, to a point where a lot of this stuff is questionable as well, especially a lot of the Chinese EV companies. And as you can see, as stocks go up, they do secondary offerings. They so prices go up and they do a secondary, raise more cash from the markets. So the EV craze has really taken off. And then, well, if the EV stocks are too expensive, what about the charging stations that charge the EVs, right? So you got Blink, BLNK, Blink Charging. You've got Beam. The real deal, and I just released this article, was Switchback Technologies, SBE.
Mm-hmm.
And it's a SPAC. So SPACs are literally blank check companies that find these private companies and then reverse merge into them. So with Switchback SBE, they reverse merged into ChargePoint. Now ChargePoint, you probably if you have any EV charging stations in your area, usually like in a mall, strip center, you'll see the EV charging stations. It's likely owned by ChargePoint. They've got over 115,000 charging stations, and they're growing about 2,000 a month. So they're the real deal, And right now with these SPACs, it can leave your head spinning, because when you try to look up the fundamentals, like, wait a minute, 2 employees, and that's because they haven't completed that reverse merger yet. So you got to do the research to find out what they're going to merge into. But it's crazy. It's wild. These SPACs have just gotten so much momentum, so much, and that's because you've had some SPACs that have been very successful. DraftKings was a SPAC, DKNG. So these SPACs, Nikola was a SPAC, but they've had some issues. But these SPACs, they're like the latest opportunity. There's a company that came out, QuantumScape, QS. They were a SPAC. And so when you talk about electronic vehicles, even Elon Musk of Tesla, he has said, look, it's all going to boil down to the batteries. The batteries are going to be the key. So the holy grail of electronic vehicles really is the battery. So you have a company called QuantumScope, QS. Now, if you look at the company, if you try to look up the company and look at the fundamentals, you're gonna be, wait a minute, there's no revenues, yet this thing's got a valuation of I don't know how many billions. All right, but they actually, you're used to lithium ion batteries, right? Cell phones, lithium ion batteries, EVs, lithium ion. So they're developing a new type of battery called lithium metal. It's solid state. It's a solid state lithium. Okay, and basically what they do is they, instead of using graphite, they use ceramic, and they have their own special process. But the bottom line is that their batteries can be charged in 15 minutes. They're 80% more. Well, normal batteries, you get maybe 5 to 10% of the optimization. Their battery, you get 80 to 88% optimization, which means that a single charge can get you potentially 400 to 600 miles. Okay, because of the ceramic, they're not flammable, and it's backed by Bill Gates. Volkswagen actually, now these guys actually started their business in 2012, 2013. So it's been 7 years, and they haven't actually produced a single battery yet. Okay, they're not supposed to produce a commercial battery until 2025. Yet Volkswagen came in, invested 100 million in them. When they get their battery in commercial mode in production, Volkswagen's going to be the first ones there to use their batteries. Now, Volkswagen is one of the largest car manufacturers in Europe, 11 million vehicles in 2019. So just Volkswagen alone is going to be more than enough business for these guys. So that's compelling. That story sells. It's a good narrative. So that's why QS, if you look at the stock, it went from like 20 and change. They had a video solid state presentation like 2 days ago, shot up to 87, and pretty much hovering around in the 70s. So, and they're almost like biotech stocks. So yeah, QuantumScape. Now, and there's another company, symbols THCB. So they are another EV battery play, and so that's starting to get some momentum as well. But fundamentally, you know, these stocks, they don't have any revenues, you know. So you actually have to do more research and just kind of, and you have to make sure that the theme is strong, because once the theme is gone, these things can collapse. So now that's what I'm a little afraid of with a lot of these new investors these days. They jump in on stuff, and there's only so much research you can do, and you can feel like the smartest guy in the world. But when that theme dries up, when the theme is over, it can collapse, and you look and nothing's changed with the fundamentals. You know, there's no news release, but why are my EV stocks down? Because that theme came and went. You know, Gartner hype cycle. You know, that's Gartner hype cycle sums it up absolutely beautiful. You know, you always get something that starts up and it's white hot. You know, the internet, white hot, cloud computing. You know, we actually had solar energy. That was hot. Okay. And so stocks like First Solar jammed up, you know, rose to $360 and then collapsed to the teens. You know, even Amazon during the heyday of the internet, you know, Amazon, Yahoo went to 200 and change. That's how Mark Cuban, you know, Shark Tank, used to be a day trader, and he was smart. You know, when Yahoo bought broadcast.com, his company, he pocketed $1.7 billion, but he knew that there was a lot of froth in the market. So he collared his restricted stock and basically survived as the stock collapsed to, I think, from 200 and change to $9, you know. But since he collared his gains with options, he still walked away with like $1.7 billion, you know. So anyway, going back to what I was saying, right now, you know, ESG, environmental, energy, electronic vehicles, the theme is strong right now. But once that theme dries up or passes, a lot of people are going to be bagging, especially with some of these questionable companies and these SPACs out there.
Thanks for watching. Be sure to like, comment, and subscribe. It helps the channel grow, and I'll see you again soon.